Hey everyone, my name is Rohit and welcome to Valuable Direction. In this video, we'll find out how this entity has been stealing your money and what we can do since now we know it. This entity with smiling face, yes, you guessed it right, is
inflation.
We know a bit about inflation, that the prices go higher and things get costly over time. But in reality, you're getting poorer if your income is not increasing at the same rate. You can also inflate that simple like button and support the channel with your love. So if you're saving your cash under a mattress, it's definitely losing its value with time. Basically, the power of your saved money to purchase same things reduces with time. Let's say to buy the same item which will cost $100 in 2010, it will cost you $128 in 2022. This is basically due to the average inflation rate of 2% and a cumulative rate of 28%. But from the past 2 years, the average inflation rate has increased from 2% to 7.5%. Some analysts believe that consumer price index is actually lagging and the real inflation could be higher. But why such high inflation happens? To understand that, let's go back to history.
From 1965 to 1982, prices for food and everyday consumer items rose dramatically from 2% in 1962 to 15% in 1979.
This was the time of double-digit runaway inflation. That time, unemployment and high prices became a common norm. This double-digit inflation began during the time of President Nixon. That was a time when US decided that dollar will not be backed anymore by gold.
The time has come for a new economic policy for the United States. Inflation robs every American, every one of you.
That time, the Federal Reserve pumped the money and kept interest rates low. So what is actually happening now?
Right now, countries and even entire continents are seeing costs increase for everything from food to clothing to fuel.
So when the US economy went into recession in March of 2022, the Federal Reserve injected stimulus funding of $6.6 trillion. During that time, the governments around the world were printing money to buy back securities and bonds so that they can increase the supply of money into the economies. And due to that short-term recession, millions of people around the world lost their jobs.
5 million salaried people have lost their jobs in July, and this is as per the data released by the Center for Monitoring India Economy. This has taken the total number of job losses in the category to close to 19 million.
During that time, due to the fear, individual savings went at all-time highs. That was the beginning of one of the three main causes of inflation. So after the vaccines roll out, the economies began to open and recover strongly. But there was already increased supply of money and credit, which stimulated more demand for goods and services. And as the world began to recover, a lot of people got their jobs back and individuals have their salaries reinstated. People had more money in hand, which led to increased spending and higher demand. So average American got richer thanks to stimulus money and the wealthy got wealthier. People were spending more on luxuries, travel, experiences and other services.
There is a new wave of super spenders, not super spreaders out there, and they are snatching up luxury goods during this time. Now, the North America share of global luxury spending expected to grow from 23% right now to 25% next year, though China is still going to lead the world by far at 40% of all global luxury spending.
And the first cause of inflation, which was a demand pull inflation, began to take shape because there was more demand of the goods and services than the production capacity of the companies. Then because of Delta and Omicron variants of COVID, manufacturing countries like China, India and Vietnam had to shut their economies for months.
So China's second largest port in the eastern city of Ningbo halted operations on Wednesday after an employee tested positive for coronavirus. The shutdown could add more pressure to strained global supply chains. The Ningbo port is particularly crucial to global trade, handling 19 million shipping containers so far this year through July. Which actually led to supply chain bottlenecks all around the globe. This demand and supply gap kept pushing prices higher. Then with all that, the next cause of inflation, which is cost push inflation, begins to get its teeth. The cost of transporting goods have increased to 4-folds now. There is a mad increase in the prices of freight container, which has inflated the cost of overall products.
Over the past year, the median cost of shipping a 20-foot container from Australia to China has increased to nearly $1,500. The most expensive route from Shanghai to Rotterdam has soared 500%. with a 40-foot box now costing a record $13,500. And the price of transporting those containers from Shanghai to Sydney has doubled to more than $5,500.
So now your Amazon package is becoming more and more expensive. Then this tension between Ukraine and Russia is skyrocketing the prices of oil to its 7-year highs. These developments in the cost of intermediate raw material have led to increase in the prices of final products. Till now we've discussed supply, demand and cost push reasons for inflation. Now we're going to discuss the third one, which is built-in cause of inflation. It's like you and me, due to the current state of the world, we expect inflation to go higher in future. So we will also demand or expect higher salaries to meet the prices and maintain our standard of living. So if the companies has to pay us more, they have to use their pricing power to meet their profit margins. In the end, consumers like you and me end up paying higher prices for goods and services, causing this wage price spiral inflation. If you read the earnings report from Amazon, Tesla and Enphase, you will notice that they all are raising prices for their products because they have the pricing power in their hands.
The CEO of Amazon saying we are experiencing higher costs driven by labor, supply shortage, and inflationary pressures. These issues persisted into the first quarter due to Omicron.
Prime News is huge as well. It shows that Amazon has pricing power, obviously.
You would have noticed the three causes of inflation are impacting us all together at the same time. Is inflation only bad? It actually depends how unexpected and the rate at which it's changing. If not controlled, it can cause hyperinflation like in 1970s.
That problem is inflation.
It wouldn't be until President Jimmy Carter appointed Paul Volcker as the chairman of the Federal Reserve that the great inflation finally began to disappear.
Paul Volcker, the Fed chairman, said, "I'm going to stop this cycle." And he clamped down on the growth of money supply and he jacked up interest rates. It caused two very severe recessions. But that had turned out to be really what needed to happen to get inflation under control.
Forcing the government to take measures which could lead economies into recession. And recession is very, very bad. People lose jobs and it takes years to recover from recession.
If we analyze the data, we will easily see high inflation in the past did lead to recession afterwards.
No one wants to see that happen again.
But if the rate of inflation is systematically controlled, which central banks aim around 2%, growing economies like India, where the target inflation is 4% and Brazil is 3.5%, can absorb higher rates of inflation. While in Europe, normally central bank keeps negative interest rates to prevent the Eurozone to go into deflation, which could lead to economic stagflation. So what is the impact of inflation on stock market? To control the inflation, the central bank have to raise interest rates faster and reduce the supply of money.
So that is why the Federal Reserve is trying to take steps which can bring the inflation down with a softer landing.
And this is why high valuation in growth stocks and unprofitable companies are plummeting drastically. Now your high growth companies have to pay more interest on their borrowed money. When interest rates and inflation go up unexpectedly high, it reduces the current value of future earnings, or you can say that the earnings need to be discounted. Therefore, the stock prices of the growth stocks has to come down to meet the new discounted valuations. So what begins to happen? Investors start fleeing to value or risk-free investments. As per some analysts, market is trying to price in 5 to 7 rate hikes in 2022.
As per a lot of analysts and market sentiments, it appears that the Federal Reserve is lagging behind the curve.
Because we all know market is always future looking. So what one can do in such high inflationary environment? We need to understand that inflation do not stay high for a long time. So one has to consider a time factor in that. One can consider investing in companies that has pricing power. Due to the demand, these companies can pass cost to the customers. They have good cash flows and great balance sheet to support them. The second thing one can think is property as a great inflation hedge, because we all know prices of properties goes up with inflation. If you've invested in a property during inflation, it can really fetch you good money. But think about it, if the only property you have is your home, then you need to have a very solid reason to sell it. Nowadays, crypto is also considered to be an inflation hedge. But there are two different camps of different thoughts. One camp thinks Bitcoin in general is risky, while the other thinks Bitcoin is a store of value. So it totally depends what is your own conviction. For me, I consider crypto both risky as well as store of value. That is why I dedicate only a portion of it to my portfolio. Along with crypto, gold is an alternative as an inflation hedge. Commodities like gold and silver are expected to be rare, so the people consider them as a store of value. Gold prices increases or remains less volatile compared to other risky assets. It is really important to time the trade with gold, because when the inflation passes, the gold prices can come down with a similar rate. But I really doubt who minds being a bag holder of gold. Another thing I firmly believe is trying to save money during these times. This is also not a financial advice, but I continue to invest in ETFs like Vanguard, which helps me to invest in over 4,000 companies if I cannot find companies with pricing power. This is also one of the easiest ways to invest in companies as well as countries. You should definitely consider to earn more money either by passive income or try to get a salary raise. An increase in your monthly income can help you to weather the storm of these inflationary times. Now you must have got a good idea what inflation is and what impact it can cause in our normal lives. We have also understood how it could affect our money and investments in the stock market. In conclusion, we can help in reducing the inflation by spending less money and reducing our demands. We can also use this time to get a salary raise if needed. Not an investment advice, but it can be a good time to accumulate stocks of good companies. And since you have a conviction in them, they can be fairly cheaper using a dollar cost average. Or sometimes it's a good idea to do nothing and consider these inflation times as a period of bad noise. If you have already invested, you can wait till the time market begins to recover. And these are my few cents on inflation and what I'm actually considering to do. I hope once again you got some great value and information from this video. Let me know in the comments below what are your thoughts on inflation and how you're trying to navigate with your strategies. Thanks for liking and subscribing to Valuable Direction. Your support is highly appreciated. God bless all and see you in the next one.